bilateral economic relationship between the US and China often gets defined by two issues. One is the bilateral trade deficit that the US runs with China. That's the biggest bilateral trade deficit that the US runs with any of its trading partners. And the second is the currency issue, the notion that China is manipulating its currency, the renminbi, in order to gain an unfair competitive advantage. It is true that the US is running a big bilateral trade deficit with China, but that's because China has become a very important part of the supply chain for US manufacturers. Companies like Walmart that do a lot of business in China and use it to stage a lot of their production. The currency issue is one where the US might have had a legitimate concern some years ago that China was intervening in foreign exchange markets to prevent its currency from appreciating too fast against the dollar. Since the middle of 2014, in fact, there's been a complete reversal. What China has been trying to do is prevent its currency, the renminbi, from falling too fast in value against the dollar. If the Trump administration were to get its wish that China allowed its currency's value to be determined entirely by market forces, in fact, China would gain a competitive advantage because the markets want to push the currency's value down relative to the dollar. So China is really doing the US a favor right now by keeping its currency relatively stable. If the US administration were to take action against China, either putting tariffs on Chinese products or calling China a currency manipulator, in present circumstances, China would have to react. With the leadership transition in China coming up towards the end of this year, the leadership cannot afford to be seen as weak or pliant relative to the US. So you might end up with China taking aggressive countermeasures. The difficulty right now is that we may be entering into dangerous territory where we end up having a trade war that nobody really wants. American businesses want access to Chinese markets. That access would be denied. There are many American firms that are already operating in China. The administrative controls on them would be tightened, and many American corporations use China as an important part of their supply chain. Those supply chains could be disrupted by China. So through a variety of covert and overt measures, China could make life quite difficult for a large number of US businesses. This could very quickly escalate into something ugly that, again, nobody really wants, but I think just the rhetoric on both sides could get amped up and get translated into destructive trade actions on both sides of the Pacific.